Welcome back to Stocks Update, your go-to destination for the latest insights, trends, and updates in the stock market world. If you're serious about understanding stocks and making informed investment decisions, you're in the right place. Today's video is all about a company that's been making waves in the tech and AI infrastructure sector, Super Microcomputer, ticker symbol SMCI. On Friday, Super Microcomputer Nasdaq, SMCI witnessed a notable decline in its stock value, slipping by approximately 2.8%. The stock reached an intraday low of $32.66 and finally closed at $32.74. This marks a drop from the previous closing price of $33.68. What really raised eyebrows was the trading volume. While this company typically enjoys a bustling average trading volume of over 73 million shares, Friday's session saw just under 10 million shares change hands, a significant 87% decline in volume. This kind of unusual activity often prompts questions. Is this just a temporary pullback? Or does it hint at deeper issues or upcoming moves? Before jumping to conclusions, let's break down everything behind the scenes, from analyst reactions to financial performance, insider activities, and institutional investor sentiment. Several prominent financial institutions and research firms have been closely monitoring SMCI, and their opinions have shifted in recent months. Here's a detailed look at how expert sentiment is evolving. JP Morgan Chase & Company recently changed their stance on SMCI. Previously rated as underweight, the stock is now viewed as neutral by JP Morgan, with the price target raised from $35 to $45. This is a strong signal that while the stock may no longer be seen as risky, the firm doesn't yet see it as a top performer either. Northland Capital Markets came in strong, assigning a strong buy rating to the stock back in December. Their bullish outlook reflects confidence in SMCI's long-term potential, especially in the server and storage technology space. Northland Securities went a step further, placing a price target of $70. This indicates a potential upside of more than 100% from current price levels, a bold prediction showing optimism about SMCI's future growth. In contrast, Goldman Sachs downgraded their outlook. Moving from a neutral to a sell rating, they slashed their price objective to $32. According to them, the current valuation might be too high relative to projected performance. Rosenblatt Securities also jumped in by initiating coverage on March 10th, rating SMCI a buy with a $60 price target. Their support hints at solid long-term fundamentals and growth opportunities in the AI server market. According to MarketBeat.com, out of all the analysts covering SMCI, 3 gave a sell rating, 10 advised to hold, 5 recommended buy, and 1 labeled it as a strong buy. Overall, the stock has a consensus rating of hold, with a consensus price target around $53. This diverse range of opinions highlights the current uncertainty and mixed sentiment surrounding SMCI's near-term future. Let's take a deeper look into the core financial metrics and performance indicators that paint the full picture of where the company stands. Market capitalization. As of now, Super Microcomputer commands a valuation of approximately $19.74 billion, placing it solidly in the mid to large cap tech category. PE ratio. Its price-to-earnings PE ratio sits around 16.65, suggesting that the stock is relatively affordable compared to many other tech peers, especially those in the high-growth AI infrastructure space. Beta. The company has a beta of 1.22, which means the stock is slightly more volatile than the broader market. This makes it an exciting, though potentially riskier, play for active traders and growth investors. Liquidity ratios. With a quick ratio of 1.93 and a current ratio of 3.77, SMCI is in a solid position to cover short-term obligations. These numbers suggest strong financial health and efficient asset management. Debt-to-equity ratio. At 0.32, SMCI's balance sheet is conservative and well managed, with relatively low debt compared to its equity base, a positive sign for long-term investors. Another key factor in evaluating any stock is insider activity, what the people at the top are doing with their shares. Here's what's been going on. Charles Liang, the company's CEO, recently sold 46,293 shares on February 26th. These were sold at an average price of $50.17, amounting to roughly $2.32 million. Post-sale, he still holds a substantial stake of over 67 million shares, valued at over $3.38 billion. So while he reduced his holdings slightly, it was a very minor adjustment in the grand scheme of his total ownership. Also on the same day, George Cao, the senior vice president, sold 71,720 shares at an average price of $50.48. This transaction totaled approximately $3.62 million. After the sale, Cao's holdings were reduced to just under 20,000 shares. In total, 137,473 shares were sold by insiders in the most recent quarter, totaling $6.77 million in value. While insider sales aren't necessarily a red flag, they do raise questions about whether executives are cashing out at perceived high points. That said, insiders still own approximately 17.6% of the company's outstanding shares, a sign that leadership is still heavily invested in the company's success. Institutional investors and hedge funds have also been active when it comes to SMCI. Here's a rundown of recent movements. Salem Investment Counselors Inc. initiated a new position in SMCI in Q4, indicating growing institutional interest. Trust Company of Vermont increased their holdings by a massive 900%, now owning 1,000 shares after acquiring 900 in the last quarter. Parkside Financial Bank and Trust took a similar approach, upping their investment by nearly 2,900%, showing strong conviction despite market volatility. Larson Financial Group LLC also increased their position by 902%, now owning close to 1,000 shares. Toth Financial Advisory Corp is a new addition to the list of institutional holders, having acquired shares in Q4. As it stands, about 84.06% of SMCI's stock is held by institutional investors and hedge funds, a strong indicator of institutional confidence. Supermicro Computer, Inc. is a global leader in developing and producing high-performance computing solutions. Based in the United States, the company also serves markets in Europe, Asia, and beyond. Their core focus is building scalable, modular systems tailored for enterprise IT infrastructure, cloud computing platforms, AI and machine learning systems, data center environments, 5G edge computing, storage and networking solutions. Their product range is extensive and includes full server systems, storage hardware, modular blade servers, workstations, server subsystems, racks and networking gear, server management software, enterprise security software. Supermicro is positioned at the intersection of booming technologies like AI, cloud computing, and data center expansion, all of which are experiencing explosive global demand. So, what's the verdict on Supermicro Computer? Strong balance sheet and liquidity. Growing demand in AI and high-performance computing. High insider and institutional ownership. Optimistic analyst targets up to $70. Recent stock decline and reduced volume. Insider selling activity. Conflicting analyst opinions. Increased competition in the server hardware space. Supermicro Computer is a solid company with huge growth potential, especially given the global shift toward AI and data-heavy applications. While short-term volatility is creating some uncertainty, long-term prospects remain attractive. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.